Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder of LikeFolio. Welcome back to the show, Andy.
Happy Friday.
Happy Friday to you, too. So we're talking housing, Zillow Group in particular, but the data that we've seen in the housing market, Andy, over the last probably 4 or 5 months has been pretty dismal. And it seems like sentiment has turned since those highs that we saw post-pandemic in latter stages of 2020 and 2021, where housing prices were rising, people were moving, job market was solid, secure. It seems like it's all fallen apart. Is this what your data is showing you at LikeFolio, that it's just not good right now?
Yeah, unfortunately, it's just not good right now is kind of the headline of the day, I think, if we're talking about the housing market. You know, and the consumer in general, you know, we've seen a big shift over the last 90 days. You know, most of the time when we're on this show, we're providing year-over-year type of charts to take as much seasonality out of things as possible. But with the rising interest rates and the way the consumers reacted this summer, it's been a pretty radical shift. You know, you can see that inflation fears are really mounting for the consumer. They're falling behind on payments. They're talking about looking for a home, building a house, or buying a home at a much lower rate than they were prior. And this is a reversal in trend. Like you mentioned, this was a strong area. This was an area where we were seeing consistent growth quarter over quarter, year over year, whatever time frame you wanted to look at. So now we're starting to see a reversal of these trends in terms of consumer interest in doing these things. It's just simply not feasible for a lot of people, you know, with mortgage rates now having moved from, I think, some people were locking in rates at 2.5% a year ago, and now we're over 5%. What that does is it creates a more expensive home, you know, because that's the way a vast majority of people buy homes. They don't buy the purchase price with cash. They buy it using a mortgage, using a payment that they can make every month. And when payments go up because interest rates go up, that means you can afford less house or not afford a house at all. And I think that combined with, you know, food inflation, general uncertainty about the economy, really taking its toll on consumers here, and the housing market, kind of that you know, one of the mainstays that got us through so much troubled times in the economy is starting to show weakness, and it's a bit of a dire sign going forward when consumer trends like this flip so sharply.
Andy, looking at housing, and we thought it was important to look at housing and interest rate sensitive products on a day like today, where Jerome Powell's speaking. And when you look at Zillow Group as a stock, right? Let's understand that real estate went crazy and got very thin, and volume started to drop, and inventory started to dry up, and that's starting to thaw slightly now. And overall, that's probably good for the U.S. economy and good for housing. You want to see houses come down to more reasonable levels. So, but that being said, Zillow Group, this company in particular, is one that is revolutionizing how people buy homes and how people look for homes. But they made a catastrophic error in terms of buying real estate and collecting it along the way that had to be unwound and was just a disaster. And the stock has paid the price for that. But the question is, even though your data is showing a poor housing market, at some point this market will level off and things will get better for the overall real estate market, as they do, right? They dry up when things are moving and volatile, and then everyone settles in and people get more comfortable. Doesn't Zillow have a pretty bright future, even with all of their missteps? Because this online, on your phone way to search for a home or keep tabs on the real estate market is going to eventually be the winning plan, don't you think?
Yeah, it has to be the winning plan. It is the winning plan. That is the way consumers already prefer to shop for homes. You know, the days of having a real estate agent take you around to 10 different listings, and 8 of them you don't even like when you first get out of the car, those days are over. You're able to do a ton of due diligence. Zillow has phenomenal technology. It's an awesome experience that consumers really like. And so I do think Zillow is well positioned within the space to be a winner, if not the winner. Redfin looks pretty good as well. They provide a really good user experience as well. So that competitor is out there. But I think you're right on another point. What was happening with the housing market? Yes, prices were going up, but liquidity was extremely thin. It was very difficult. A lot of people were trying to buy homes. They had to go over ask. There wasn't enough inventory on the market for a long time. Now homes sitting a little longer and increasing the liquidity of that transaction. As traders, we know how important liquidity is. It can be just as important as price a lot of times. And so when we see this in the housing market, I think a cooling off is probably good, and it's probably good for Zillow because it means people have a little more time and a little more energy to actually use those tools to search rather than just try to pounce on the first listing that comes available. So I think you're right. Long term, Zillow is a winner in this space. It's just the space is facing some significant headwinds in the near term.
Yeah, and Andy, on the chart that you gave us, you mentioned it basically is flip-flopped over the last maybe 6 to 8 months, where it seems like the metrics like inflation fear wasn't existent at that point, but the stuff at the bottom, buying a home, building a house, housing demand, looking for a home, that was all on the upside, less than a year ago. When you look at a chart like this, and all the other data that you have that on the consumer, is this a canary in the coal mine type of situation where the housing market, it means a lot to the economy, right? It's 1/5 the CPI. It is, the asset that most Americans, that they have most of their money invested in. This is a canary in the coal mine for possibly, not recession, but just a really big slowdown in the economy, right?
Yeah, I do think so. This is one of those metrics, and one of the reasons I wanted to bring it to you guys is, this is one that doesn't change quickly. So when you see something like housing demand in LikeFolio data, just historically, when you see big ticket items like this shift in terms of, consumer enthusiasm or consumer demand or how much people are talking about it, the shifts are slower. It's like a barge. They're slower. They're more meaningful, and they're harder to stop. And so I think this is the beginning, I guess canary in the coal mine is a good way to put it, yellow flag, that the consumer's wearing out, and the housing market was really reliant on those very, very low rates. And, eventually it will stabilize and normalize. And I think mortgage rates in the 5-6%, I'm sure Kevin can tell us stories about paying 21% when he was young, but
Hey!
Mortgage rates in the 5 or 6% range historically is actually pretty low and pretty normal. So I think if we can get through this tough period, I think it's going to be a tough next 2 or 3 quarters, and then hopefully by the time we come around into the seasonal spring and summer surge in housing, we've got something good to talk about. We've got mortgage rates that are fairly stable and predictable. Because right now people are just getting priced out of things that they thought they had, and they're waiting for prices to come down.
Yeah, it's definitely cooled down as far as people looking, cancellations also. I know they've had earnings earlier this month, Andy, but if you guys had an earnings score on Zillow Group, what's it look like?
Yeah, really actually neutral, just completely neutral. I don't think that there's any big shocks coming for Zillow Group or Redfin in the near term. I do think that long term there's headwinds, but they're best of breed. So if you're thinking really long term, I would have both of those stocks, Redfin and Zillow, on your watch list, ready to pounce if baby gets thrown out with the bathwater, because I think it will happen a little bit.
Yeah, Zillow Group down over 40% so far this year, so definitely better opportunities now. All right, Andy, great stuff as always. Have a great weekend.
You too. Appreciate it.
All right, that's Andy Swan, the co-founder of LikeFolio, breaking down the data for us in the housing market.